Hello everyone, welcome back to Lab4crypto. For the past couple of weeks, the market is moving sideways. We are having fears of recession, and that is reflected also in Google Trends, but also on the price action of the market. Even if we check S&P 500, for example, you will see that we have a sharp drop in the price action of the S&P 500 and also Bitcoin. And if you compare that with the drop that we had on COVID, you will see that even that one was not even that sharp compared to what we had recently. And that, of course, is due to tariffs, due to wars, due to geopolitical issues, and everything have built up, of course. And as I stated many times through my blogs as well, which basically I outline my thoughts, is that I don't believe that the top was already back in December, January. So I don't believe that we're going to have a left translated cycle, but we're going to have a right one, which that means that the top, in my case, is expected to be in Q4 2025 or at the beginning of 2026. The reason that I think that maybe we're going to have this small shift is because the USA has not joined yet the boost in global liquidity. And I will explain. So in this video, I didn't want to show you again various graphs and models why I believe that the top is not in, because it's something that I did on my previous videos. But I wanted to make a single video which basically explains the macroeconomic landscape, why everybody's fixated on the next move of the Fed, and why it has the potential to even start a small rally in the next couple of weeks, and what factors are going to boost that. But in the end, I still believe that the top will be at the end of 2025 or the beginning of 2026. So this is an all-in-one video that if you watch it, you'll be able to understand the next move of Bitcoin and generally risky assets like stocks, for example. So let's start. So Bitcoin, for example, now you will see that is below its bull market support band. The bull market support band is the 20-week SMA and the 21-week EMA. So it's this band between the green and the red. And you will see that now we are below it. It's not something that we don't see in bull runs. You will see also in July, September, we were below it, and then we moved again above. Also, that happened in September, November of 2023, and also in 22. What is the uniqueness now is that this happened at the beginning in the Q1 of 2025. Of course, on the other hand, if you think all these major changes that the US is making and the fears with the tariff wars and everything, that makes sense to have this dip now, especially as I think the US administration is trying to make the moves that they have to make to radically change their economic landscape, the spending, the reduction of their deficits, which definitely they are going for bankruptcy if they didn't do that. And it's better to do that on the beginning of the term and not at the middle or at the end, because you are risking your chance to re-elect it. Anyway, I have a lot of tabs here, which I will try to explain them all so you will understand why this is happening. So, why everyone is fixated on the next Fed meeting, which is today, I think, until I publish the video will be a couple of hours later, is that the market is expecting that the next rate cut will be, let me see, yeah. So the market is expecting that the Fed will do nothing, basically, will keep the rates steady. So no cut, just pause. Now you'll tell me why the market is too fixated on this FOMC meeting. which is in 5 hours, by the way. Yeah. So it's basically this line which they had on the Fed meeting report. So I'll have the link if you want to read it. But basically, what they have said is that in their expectation, the Federal Reserve Balance Sheet Policy Survey response on the average saw the process of runoff, so QT basically, to be concluded by mid 2025. But many of you ask me why I moved my projection from end of 2025 to maybe at the beginning of 2026, and basically is this line. Because the Fed said that they were expecting to end the QT earlier, but now is projected to be mid 2025. The important thing is that when this was released, the S&P 500 was close to its all-time high. So that means now with the 10% drawdown that we had on the S&P 500, because Fed are watching the markets, the stock market, not the crypto market, of course, and with the thing that the new U.S. administration was vocal about, that they want the rates to come down, and with the fact that they say here that the response was on average, so that means there were some people in the committee that think that the QT should already been started, and some of them that say that it should be postponed a little bit. So with the latest reading that we had on inflation that was dropped, this is the official results compared to the last month. And also, if we check the Truflation Index, which this one is an independent one, is not the one from the US, is saying that with real-time data that the true inflation in the US is at 1.72. So the main question now is that does the Fed has enough data to at least stop the QT? And what is the QT? Basically, is this line, if you check this yellow line, what it shows is that the balance sheet of the US government is shrinking. And the last time you'll see that we were going to lower values, this were the COVID crash. And then here, the difference is that the QE started because of the COVID pandemic and the fears of extreme recession. But the main point is that when the QT ends, that is good news for the market. And of course, when the QE comes, it's going to be even better. The QE, the Fed was clear that they're not going to start using this tool until the rates go close to zero, and we are far away from that. So the markets are going to be waiting for the end of QT. And actually, if we go and check, the Bank of Canada is already said that they're going to stop the QT, and we have countries like Europe and China also already boosting global liquidity, because the global liquidity is increasing, but you will see the global liquidity is increasing and the US have not joined the party yet. So everybody is waiting for the US as well to get in the game. And the reason that everybody is waiting for the US, you will see that this is the global GDP, and you will see that 26.11% of the global GDP is from the United States. So the biggest economy, let's say, is the United States. Second is China. Third is Germany. Fourth is Japan, and so on. And that is why also people are fixating on what Germany is doing. I will explain in a bit why this is important. But the main point is that everybody's waiting from United States because it's the biggest economy by far. Let's move to the next slide. Now, yes. So as I said, people are now starting to project that because of what happened with the US stocks, is that the Fed will be inclined to end the QT before May. So not in June, July, but in May. That has the potential to bring a rally into the market. And I expect even altcoins to outperform a little bit BTC. But I will still stay with BTC until I'm sure that risky assets, more risky assets than Bitcoin, have the potential to go in an altcoin season. You will see, and if you check all my Twitter posts, you'll never saw me for the past 3 years to say that the altcoin season has started. And always I was saying to people to be cautious, that wait for the altcoin season index to flash for a couple of weeks and then join the game. It's no point for you to try to predict in advance how much, what the riskiest assets in the market are going to do in the next couple of months and get this 80 and 90% drawdown that the altcoins have to just get a 1 or 2x. For me, the risk reward ratio was small, so I didn't want to do that, and that is why my portfolio is still fine. But anyway, so the point is that if we have indication from the Fed today that they're going to end the QT in May, for example, which I think the next meeting is in May. We're not going to have one in April. And the market here is projecting only that the next rate cut will happen basically in June. But at least if we get a positive news that either they're going to reduce the rate of their quantitative tightening, the QT, or they're going to stop it, that will spark a rally. But we will see. If the Fed, for example, come and say nothing about it, or say that the plan is still the same, I think altcoins will have more a downside. Bitcoin also, but of course it's going to be smaller compared to altcoins. Moving forward, you will see that on Google Trends, in Google Trends, that the search for Bitcoin is at really low levels. Even if we compare with prices, for example, let's see if I have it open. Yeah. So today the closing price of Bitcoin was 82.5, and the Google Trends is at 28. We were at this same level, for example, in October, before, when the price of Bitcoin was 68, before we had the rally in November. So the market is in a reset mode now, with all this uncertainty in the macroeconomics and political landscape. And it's waiting for a spark to go to higher values. And I think that spark will come in the next couple of months. And that is why I said also to the premium users that wait a bit for the end of March or the job reports in April. And I think the market will start to get a direction, decide a direction in the next 30 days. So it's crucial for you to be prepared in both scenarios. But my bias is that it's going to be on the upside. So moving next, as I said, you'll see that the recession on Google Trends search was really high lately, was even greater than in 2024, but not greater than in 2022 after the COVID pandemic and the crash we had in the markets. But it's elevated, but you'll see now it's starting to drop. Because I have watched the plan that the US administration has, and people need to understand that, is that the Doge, for example, is cutting jobs, but is doing it in a sustained way that these employees are going to be absorbed in the private sector. And basically, they try to engineer a soft landing, let's say, on the economy from the US administration side, and do not aggressively cut spending and jobs, because that will definitely induce a recession. And that is a good plan in my case, and it needs to be done, of course. But we of course need to be cautious, but we have other countries that are going to are boosting the global liquidity, and I will come in a bit on that. Because it's important for you to know that, of course, US is the major economy, but if we have all the major ones boosting the global liquidity, that will give us enough time to get a clearer picture on what's happening to the US. I also do not forget that I also write my thoughts in my blog, so it's completely free. You just type your email and we receive it. That was basically a day ago, 20 hours ago, which I explain a little bit what's happening in the macroeconomics, but this is a more in-depth video. Moving forward, I wanted to say that basically Bitcoin is undervalued now as well, and the total crypto market cap is undervalued heavily. So that is why I'm thinking that we just need a spark to go to higher values. You will find these interactive plots in our platform, which you'll find detailed video explanation below. But my point is that even if we check the short-term risk, for example, of Bitcoin, you will see that we are well below the green line. So we are really in a cool phase, which usually we don't stay there for long in bull runs. And I think we are in a bull run. But definitely, it's important for you to have all this data and make your own conclusion. This is my bias. Moving forward, why it's important to watch what other countries are doing. For example, you will say the French President Macron says that France will order more Rafale warplanes than planned. So the European Union said that they're going to inject 800 billion to the EU economy to build their defense. Because what is happening with Ukraine and Russia and US, basically they said that it's time for them to protect themselves better. Now, from someone that watches the market, this number is important because that amount of money are going to pour into the economy. They're going to create jobs, either for tanks, for planes, whatever. And where there is excess money in the market, that money, some of them at least, are going to end up to risky assets like stocks, like Bitcoin, and so on. So when you have this spending, it's good for the markets. That's why they like spending and not cutting, because they know that some of that money are going to end up into the markets. Also, as I said, the Bank of Canada said that they have ended the quantitative tightening. So we have Canada, we have Europe also reducing their interest rates and are at 2.5%, if I'm not mistaken. So close to the 2% goal. Also, they are pouring money into the market. And that is important because in US, we're saying that the quantitative tightening has not stopped yet. And there's fears of recession, of course. But if you check the consumer spending, why we check consumer spending, the GDP basically, the equation of GDP is using one factor is the consumption. So how the households, how much money they spend, let's say, per quarter, as that is helping the GDP. And you will see that basically we are in an uptrend since 2022. So at the end, let's say, of March and the beginning of April, when the results are going to come, it's crucial to see this number to see if there is any slowdown, because it's one thing to see the actual data and see how much money people are actually spending and what someone like me or other, let's say, analyst is believing. So when you see this keep increasing, that's going to be good news, or either close to this value, not lower, much lower at least, because definitely we had a lot of fears about recession and maybe that affected a little bit people, because there is an ongoing war, let's say, about what tariffs are going to bring. Of course, tariffs are going to be inflationary because in the end, the someone is going to import something needs to pay the tariffs to the US government, and therefore the prices needs to go up so it will be profitable. But on the other hand, people thinking that because the prices are going to go up, people are starting to become more cautious, and therefore the demand is going to be lower, and therefore people the sellers are going to need to adjust their prices and bring them lower, so people are going to, let's say, be attracted to buy stuff. So this is a gray area that everyone is wanting to see, but definitely I think because the interest rates that the US government is expected to pay in the couple of months definitely are going to need, I think, an injections of capital to be able to do it. And that is why I think the US administration wants to lower interest rates. Because when you lower the interest rates and print money, that means it's like you are reducing the actual value of your debt, because now the debt becomes cheaper. That's a talk for another time. My main point is that we have Europe, we have China, we have Canada stopping QT, reducing interest rate, injecting money into the market, and the eyes are fixated on United States. So if the United States and the Fed basically starting to signal that the QT is going to end, so this line, let's find. So this line at least is going to stop going down and is going to start becoming flat. That will be good news for the markets. And that is why I expect altcoins to have a short rally. But in the end, we will see if we check, for example, Ethereum. Ethereum did not get a sustained rally until QE. So you will see when the yellow line went up, this is the time when altcoins did amazingly. This time, though, I think that with all the positive news that we have in the market, because we have BlackRock basically saying that the institutional demand for Bitcoin is high, we have the US government be really bullish on the crypto sector. They want to deregulate the sector and let innovation rise. That maybe allow us to start seeing a sustained rally without QE. We will see, of course, when the time comes, and I will make a video on it. But we have some catalysts that they can allow us to move higher. Because in the end, if we go, for example, and check what whales are doing lately, which they have a significant amount of BTC, you will see that they are accumulating since February, the end of February, until today. You keep seeing this line going up, and these are accounts which they have 1,000 BTC to 10,000 BTC. And that is why you'll see, and I explain also in my latest article, that there is a disconnect between institutions and retail. So it's important for you to understand that people like BlackRock going and advocating for BTC and say that there is institutional interest, it's huge for BTC, because these people have huge amount of money that they can move the markets sooner than you think. Therefore, it's crucial for you to see what these whales are doing, but also have an understanding of the global macroeconomic landscape. In this video, I wanted to show you all this, so you'll be able to understand why we have this sharp drop lately and what catalysts are important to watch to change this trend. As I said, I believe that the market is still going to reach values of more than 180 by the end of Q4 of this year and the beginning of the next one. The plan is not changed at all, in my view. But in the short term, we'll have these catalysts that they can move the markets up or down, depending on the fear and the sentiment of the people. But in the end, the long-term trend stays the same. And I hope you liked the video. Please give me a thumbs up and leave a comment if you find value in it, as that helps me understand what you people think about my videos, and also understand what points you want me to be more focused on. And until next time, bye bye.